Good morning, Pathfinders. It is Thursday, May 19th, just minutes before the market's going to open in what looks to be another down day for the market following one of the worst days of the year. Now, I know there's a lot of talk about bear markets. So let's talk a little bit about what to expect in a bear market. First of all, if we have a recession, the market drops typically 35%. If we don't have a recession, the market typically drops about 24%. So on average, the market drops 33% in a bear market. Now, this happened in less than a month during COVID, which was the fastest bear on record. But it can also take a long time, such as it did in 07-08, when the market dropped 57%. So we don't know the depth, we don't know the duration of a bear market, but we do know on average the market drops about 33% in 8.3 months. Well, if we're already down close to 20%, then we're more than halfway through the drop of a bear market. Additionally, we're about halfway through the time in which a bear market is going to reach its worst point. So if we're entering a bear market because we're teetering on a 20% drop in the S&P 500, people will begin to ask, should we be buying and looking for opportunity, or should we be selling and preserving capital because the market may go down more? Well, I've got another option for you, which is to make a proactive choice to hold your high-quality diversified portfolio. If you believe that buying right now because there's opportunity is what you'd like to do, I would just encourage you to consider that that's extra cash that you wouldn't need for 3 to 5 years, which is our normal perspective on stock market opportunities. And if that's the case, I certainly would encourage you to consider looking at these prices for some pretty incredible deals. On the other hand, if you're worried about preserving capital, I would mention that some of the best days in the portfolios are coming back after a bear market. And so if we are reaching the bottom now or in 2 months from now, if you miss just a few days, you are never going to regain the capital that you're going to lose if you were to sell out now. So both buying and selling can be choices. But again, we would tell you that we built a diversified portfolio with high quality investments that are going to be able to weather this storm in the long run. And again, we keep you focused on that with a proactive choice to hold your investments. I recently got back this week from a conference with some of the best financial advisors in the country, along with some of the largest institutional money managers in the country. And there was a sense of bullishness over the next 3 to 9 months as we were looking for opportunities to add into investments. Yes, there are some scary macroeconomic factors, including the geopolitical risks such as Russia, things about affecting the inflation rate both here and internationally. So there are certainly reasons to worry. But worry isn't a good investment strategy. And if you're worried about your investments, then I would suggest a couple of things. Number one, reach out, let us know. Let's talk through it. Number two, turn off the TV and the news. They're not there to help you feel comfortable about your portfolio or even your life. They're there to try to sell advertising and get you to watch TV as much as you possibly can. So again, turn off the tube. Those aren't factors that you can control. Focus on the things you can control in your life and understand that the market is in a perpetual cycle of climbing and that it has temporary setbacks that are normal, such as crashes, bear markets, and recessions. These are things we plan for. We hope that you can hold steadfast through this bear market and let us know if we can help in any way. Enjoy the warm summer air that's coming to us and hope you have a wonderful day. Thanks.